Hello traders. Good morning, good afternoon, and good evening, depending upon your time zone. My name is Mohammed Azim, and welcome to Trading Webinar sponsored by True Traders United. Okay, I need to first confirm, do you manage to see my computer screen? Okay, okay, good. Let's get started. First, a disclaimer. Let me start by sharing a little information about myself. But let's talk about the true webinar house rules first. So let me start by sharing a little bit about myself. Need to check out 1 second. Everything just messed up again. Okay. Got 3 participants. Okay, let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott wave. Over the years, I have expanded my knowledge into broader market analysis, diving deeper into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. So these are the main topics that we are going to cover inside today's webinar. Macroeconomic events and data releases. We're going to cover previous week fundamental analysis. So we're going to talk about unemployment rate related to New Zealand dollar. And then we are also going to discuss non-farm payroll data report, also known as non-farm employment change, that is directly related to United States dollar. So let's take a look at last week fundamental data releases. So New Zealand dollar versus United States dollar. If you do a little bit comparison, the New Zealand dollar unemployment rate it was 5.1. The forecast was 5.1 expected, so that's the expectation. Previously we got 4.8. So this means 5.1 unemployment rate. It's a bad number, it's a bad data, and it's bad for the New Zealand dollar. In other words, we should get a drop in price action of New Zealand dollar versus United States dollar currency pair. Now I will show you the chart later that how the market actually reacted. Next important news is the non-farm employment change number. And the forecast was 169K and we got 143K. So this number is actually good, and euro dollar or New Zealand dollar and pound dollar, those currency pairs, they should start a decline. Now we will see the charts as well. Now this week's global market trends, we are going to cover USD CAD and the euro dollar currency pair. For current week fundamental analysis, I'm going to talk about gross domestic product GDP of British pound versus United States dollar and the unemployment rate number for the AUD USD, meaning the Aussie unemployment number. Okay, let's do a little analysis on charts. So once you manage to see my computer screen, just let me know. I've shared my charts. Do you manage to see the charts over here? Just type yes, no. Okay, good. Okay, first let's take a look at unemployment rate NZD versus US dollar. So go over here and we have this New Zealand dollar currency pair. Now we got a news that wasn't good for the New Zealand dollar. So we should get a drop in price action. Now look what happened. Price action actually created a break to the downside, but the actual body closed higher and we actually got 3 consecutive bullish trading days. Now after that we're getting a pullback. So sometime it happens that you get a good news, but people translate it and interpret that data as bad. So this is what we actually got. The NZD USD currency pair should have showed us a bearish drop, but the reality is after a few days it's actually trying to rise back up. So this is something not good. In other words, if NZD USD currency pair is going to rise up, then it means United States dollar is becoming weak and the New Zealand dollar is becoming strong. Okay, if you just look at the news related to New Zealand dollar, we should have seen a drop in price action. But overall, market just turned sideways, created a false break to the downside. Now let's take a look at the non-farm employment change reaction on price chart. So here's the chart of euro dollar currency pair, and we got good news. Okay, and look what happened. Overall, euro dollar currency pair is trying to create kind of a sideways looking triangle pattern. So overall, I would say it's going sideways. It's trying to move sideways. Okay, that's what we are basically getting. So those who just looked at the news and did not respect the technical factors, you can see that most of them only lost money if you just try to trade with news. So that's the analysis for non-farm payroll data report. Based on the news, we should have seen a drop in price action in euro dollar currency. The euro should become weak and United States dollar should become strong. But instead of that, price just turned sideways right over here. Okay, next uh, we look at the next we look at current week fundamental analysis. Let's go back to the PowerPoint presentation. So gross domestic product, GDP, British pound, and the unemployment rate, the AUD USD. Now, as far as the pound dollar is concerned, the chart, if you take a look at British pound chart, overall it's stepping up, it's moving up. And it's quite possible that British pound is probably going to reach a new old swing low or a new old swing high this week. I will discuss more I will discuss more about it in a few minutes time when we do the current week's technical analysis. So the numbers, if they are going to be bad for the pound, then I would expect price action to move sideways instead of getting a surprise in market. Same goes with the Australian dollar. If you take a look at Aussie dollar currency pair daily time frame, you can notice that we got a break to the downside, which turns out to be just a false break. And now price action is probably trying to hit the old swing high right up over here. Okay. Okay, so let's do some live technical analysis for the current week. I'm going to start with the euro dollar currency pair. If I start from the monthly time frame, I think it's a good idea to start from the higher time frame and then work my way down to the smaller time frames. So euro dollar currency pair monthly time frame. If I zoom out a little bit, you can see we got overall nice downtrend inside monthly time frame. I'm going to change the color to red. Okay. Okay, zoom out a little bit. Okay, and if you look at this low over here, you can see market is trying to rise up. So it seems to me price action is trying to create a potential triangle formation inside euro dollar currency pair based on monthly time frame. Now let's go down to a weekly time frame and then we will cover the daily time frame as well. So in weekly time frame, the way I see, if I remove all of this, in weekly time frame, we got this support down over here and market only left a tail of a candlestick or just a shadow of a candlestick or a wick of a candlestick, you might say, and the actual body closed higher. So to me, it's a false breakout, and it's quite possible that euro dollar is going to rise up from current levels. Next, let us take a look at daily time frame. If you do a simple technical analysis, just try to define the higher swing highs and higher swing lows type situation, you will notice that price action is overall printing lower swing highs. One second, close this one. Okay, we got a lower swing highs and we got a lower swing lows inside daily time frame of euro dollar currency pair. So when I see the daily time frame, all I see is a clear downtrend going on, and market action or price action is stepping down, and overall it's moving down. Now we have one resistance right over here. However, if you try to confirm that breakout, you will notice that we only got one candlestick breakout, and then this one looks like to me kind of an inside bar, and then price action is trying to drop again. It's quite possible that it's going to remain sideways for next few more trading days. Let's take a look at 4-hour time frame. In 4-hour time frame, the way I see price opened with a gap. This was a gap right over here. I'm going to write down, let's see, go over here, customize. Okay, label. Okay, over here we got a gap in price action. Change the font size to 28. So we got a gap in price action. Now there's a, I would say, 50-50 chance whenever the gap appear. There's always a 50-50 chance that price action is going to fill the gap. Almost always is a 50-50 chance. So in this scenario, price action did fill the gap. It actually went a little bit higher and then dropped after that. But to me, it's still going sideways, even in 4-hour time frame. However, if we zoom out a little bit, go over to a 1-hour time frame, you can see we are getting okay. Let's try to duplicate the line here. It's not a perfect channel, but I would say if market tries to rise up and takes out of this channel and even close a candlestick above the old swing high as well, then we can say with high confidence that price action is probably going to rise up. If we don't get such a market structure, such a price action, then just let it go. Next, let us take a look at USD JPY currency pair. USD JPY. I'm going to go to our monthly time frame. Overall, in monthly time frame, it looks bullish. We can easily notice a nice upward sloping trend line in monthly chart. Let's go to a weekly time frame. In weekly time frame, we actually got a breakdown. Let me show you. This was a support, and what we got is we got a breakdown in price action right over here. Okay, let me fill this as well. Triangle, fill. Okay, so this is right over here. We got a drop in price action and actually a breakdown, I would say. So this big body candlestick closed below the old swing low or the most recent support level. So the way I see USD JPY weekly time frame is going sideways. Next is the daily time frame. In daily time frame, if you draw a trend line, you will notice that we got a breakout. This breakout could turn into a false breakout as well. Here it is. This is our break right over here. However, to do a safe play, I think it's a good idea to wait for the price action to also breaks below the support level as well. Once we get a close of a candlestick below the old support area as well, then I think it's a good idea to start looking for some sell trades or sell trade setups. Next is the 4-hour time frame of USD Yen currency pair. 4-hour trend looks quite bearish. If I zoom out a little bit, you can see price action is going down overall. If you look at the higher swing highs and higher swing lows, overall is stepping down. Next is the 1-hour time frame. In 1-hour time frame, USD Yen, it looks like to me market is trying to create a triangle pattern, which is basically a sideways pattern. And sooner or later we could get a breakout. Okay. Next, let us take a look at spot gold. Okay, spot gold, let's look at the monthly time frame. We got a nice big run and price action of spot gold. It actually printed the new highs of this year and the new highs of the month as well. Even if you take a look at weekly time frame, we keep getting higher swing highs and higher swing lows pattern. So it's clearly a nice bullish trend going on inside spot gold in monthly as well as a weekly time frame. Now in daily time frame, we might get a pullback over here. Let me see. Do we have Fibonacci level over here? Fibonacci expansion is there. Then we have okay. Okay. So let's do the Fibonacci expansion actually. Let's do it again. I don't like the colors and they are not appealing and unclear. I'm going to use a solid color. So let's draw it again. No, I think there's some problem with the tool. Okay, this is the 61.8 and then we got the 100% right up there. Okay, so 100% shows us kind of a spike type situation. So at this point in time, it's quite possible that market is going to create a short-term pullback at or around the previous lows. inside daily time frame. The trend is still up. So the way I see, it is still an uptrend, and a good idea is to only look for buy trades, but you can buy on dips. This is what you can do. You can wait for the market to create a short-term pullback. Price are on sale now, and you can then look for a buy trade at a cheap price. Okay. Next, what else we have? 4-hour spot gold 4-hour time frame. Same story, higher swing highs and higher swing lows just keep going up. If you take a look at 1-hour time frame, market is trying to show us um, some bearish candlesticks over here, but I would still consider this decline as a pullback in price action, which provides us a chance to probably look for buy trades. If you take a look at spot silver, go to a monthly time frame. Charts are loading. Give it a second. Let's look at the weekly first. Now, right over here, we got this weekly price action. So I can safely say that price action is printing higher swing highs and higher swing lows pattern. Now, in monthly time frame, we can easily draw a simple trend line right over here. Let's try again here. And then we can draw a parallel line. 1 second. Here. Zoom out a little bit. And then here's the midline or the mid channel line. So you can notice that price action is respecting the mid level or middle line. Sometimes it provides support, and when market is rising up from the lows, it provides actually resistance. But once market actually manages to clear the midline or mid level, then price usually becomes directional, like the way we got earlier over here. This is where we got a breakout and market tries to even continue the uptrend. Then we got the break to the downside, and it did show some hesitation, turned sideways a little bit, and retested the mid level or midline of this bullish trend channel, and then resumed the downtrend. Now price action is retesting this midline again, and we got a bullish candlestick close over here, so it's quite possible that the spot gold is probably the spot silver is probably going to continue the bullish trend. If you take a look at weekly, same story, higher swing highs and higher swing lows. Now inside daily time frame, if I zoom out a little bit, over here we got the breakdown in price action. So it's quite possible that the current price action is just a pullback, and we're probably going to get a new low in price action. Now remember, we have already seen the leg one over here. After leg one, we got a pullback, and then market is probably going to print a second leg, a second bearish leg over here. If you take a look at 4-hour time frame, it's clearly shows us higher swing highs and higher swing lows pattern. Okay. In 1 hour, price action is actually becoming bearish. And we got a breakdown actually in price action right over here. Multiple times price action tries to test and then retest this level. but overall it managed to break through it, so it's quite possible that it's going to resume the downtrend in 1 hour time frame of spot silver. Okay, I would like to discuss some trading opportunities as well. So let's take a look at GBP USD currency pair. Here it is. Go to a daily. Now, the British pound has been moving sideways for a few days, but has just reached the new old swing low. Then we got a new old swing high over here as well. So this was the new old swing low, and then market is trying to rise back up. The market may be reacting to stronger than expected US data or a shift in market sentiment towards the US dollar. Now we have some key price levels. We have a key support at 1.2099. Let me show you. Okay, 1.2099 down over here. That's the key support level with the resistance at 1.2568. Let me show you that as well on a price chart. Okay, that's the resistance 1.2568. Now a breakout above 1.2568 could open the door for further gains for the price action, while 1.2248 or 49 remains an important level to watch for any pullbacks. Market might try to retest this old swing low and then rise back up. Now the entry idea or a trade idea is to look for a bullish breakout above 1.2568, which is basically acting as an old resistance or old swing high. Okay, and once it happens, it's going to open the door for further gains. Okay, so you can consider buying near support with a good risk to reward trade setup. If you are going to look for a buy trade after a breakout at 1.2568. Okay, now if you do go long, your next target would be around 1.2811. Now the stop loss concentration is place stop loss below 1.2166 for long positions to limit risk if the price reverses. This helps your trading capital by minimizing potential losses in case the market moves against your trade. Now, the trade could be invalidated if there is a sudden risk on sentiment or positive US economic news, especially if the US dollar strengthens unexpectedly, since the British pound versus US dollar involves the US dollar. Any changes in Fed policy affects the pair. A stronger US dollar due to rates hike or positive US data pushes the British pound lower, while a weaker US dollar lifts the pair. For buyers, price action should not hit 1.2099. So this was the first trade setup. Now let's discuss another one. I'm going to talk about Australian dollar currency pair. Now AUD USD has been moving sideways for a few days but has just printed a new low. So we got the new low in price action. However, it didn't manage to actually close a bearish candlestick below the old swing low over here. The market may be reacting to stronger than expected US data or a shift in market sentiment towards the United States dollar. The key support level that we have right over here at 1.63. 1 second. Let me Write it down. So we have a key support at 1.6087 here, down over here. That's the key support level, and then we also have a resistance, which is basically the old swing high or a old resistance area, in other words. So 0.6330, that's the old swing high, and a breakout above 0.6330 could open the door for further gains, while 0.6130 remains an important level to watch for any pullbacks. Let me write it down and show you this level actually on a price chart as well. Okay, go over here. So 0.6130, that's the level. So if market tries to retest this level, which is the old swing high again, let me show you what I mean by that. We have this support over here. Okay, so if market tries to drop and test this level, it's quite possible that that would be a nice pullback level to watch. Now the entry or a trade idea is to look for a breakout above 0.6330 for a long position, with the next target around 0.6549 here, right up there. Okay, so if we do get a bullish breakout, the chances are price action is going to climb. It's going to move up to reach 0.6549 area. Alternatively, if there's a pullback at 0.6130, you could consider buying near support with a good risk to reward. Now, let's talk a little bit about the stop loss. Not all the times you're going to make money. Sometimes it doesn't work no matter how hard you try. So you need to place your stop loss below 0.6130 for long positions to limit risk if the price action reverses. And this helps protect your trading capital by minimizing potential losses in case market moves against your trade. Now, the catalyst or the risk is the trade could be invalidated if there is a sudden risk on statement or positive US economic news, especially if the United States dollar strengthens unexpectedly. Since the Australian dollar versus United States dollar involves the US dollar, any changes in Fed policy affect the pair. A strong US dollar due to rate hike or positive US data pushes Australian dollar versus US dollar lower, while a weaker US dollar financial data would lift the pair. So for buyers, price action, should not hit the 0.6087 level. So if you are interested in buying, the condition is price should not hit 0.6087 level. Okay, I think that's pretty much okay. I'm going to give some time for the Q&A session. So if you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. Alpha is saying, thanks for your analysis. You are welcome. Okay. So thank you for hanging around and see you on the next trading webinar. So that's it for the time being from my side. Have a nice day and bye-bye.